I mainly focus on trading. See, I like trading the ES more than the NQ because the thing is, the NQ actually has lower volume than the ES, but higher volatility. The ES has higher volume and lower volatility, so I find the ES to be actually a lot better for price action. You get less like absurd wicks on your candles and whatnot. So it's interesting because a lot of people when they start trading futures, they start off trading NQ, and I think it's because the appeal of the volatility. But when you actually get into it, I find the ES to be much more consistent. I used to trade NQ. I also used to trade crude oil, but I just found that the results were a lot better just focusing on ES. I'm gonna pull up a NQ chart for you just to make this easier. All right, so here's a 1,000 tick NQ chart. All right, so what's this? 630. Here's the open. Literally right here. There's a second entry long. Pullback, first entry. Pullback, second entry long. You could long right above this candle and ride that thing and just literally be done for the day. So you could have been done in the first like 2 minutes of the day if you were trading the NQ on that time frame. So I just want to point that out. Like price action works on everything. And I don't even trade NQ. I just wanted to show you that it works on there. I just trade ES. But I wanted to show you that the price action that I teach, even though I traded on the 2000 tick ES chart, it works on all time frames, and that's the idea. All right, so this is just some trading experience and wisdom that I just wanted to share with you guys. So when trading is one of the only industries that you can just get into with no there's no barrier to entry at all besides a little bit of money, right? There's almost no barrier to entry. That makes this a pretty weird industry in a way because anybody can just start doing it and get completely wrecked, right? It's like how if you go to a casino, the only barrier to entry is to do anything there is, do you have a little bit of money and are you of age to get in, right? That's it. So the thing is, people can go to the casino and lose all their money. There's no barrier to entry for gambling. Trading is not that different from that. People can just open a brokerage account and lose all their money. And there's no barrier to entry for learning, for your skills, for development, for any of that. It's all based on your own self-discipline. Now, when we look at other industries, like professional services, like being a lawyer or a medical doctor or a surgeon, or even like an electrician, in the trades, being in the trades, there's a skill certification process that you go through to get there, right? Like nobody just becomes a lawyer and starts practicing. It just isn't going to work. And same with being a doctor or a surgeon or any of those fields. Being an electrician, you go through a training process before you start just going out and wiring things. And the reason for that is a lot of reasons. Safety, protecting other people, blah, blah, blah. Now in trading, you just have to protect yourself. So what this comes down to is you need to think of it the way that those skills are. To develop a skill, you should expect a long training period where you're actually practicing before you launch. And so I always say this to people, like, you want to go through a course, go through a very serious course, a learning opportunity where you can learn, then start watching the chart in real time and start trading on a demo account. So you're watching the live market. And with futures, you can trade the live market on a demo account and it executes the same way as a paid account. So what you want to do is you want to start trading on a demo account for a long period of time. You want to do this until you can basically double your demo account reasonably. And when I say reasonably, what I mean is don't have a $5,000 demo account and take trades that are could lose you $2,500. That's just crazy. What you want to do is be realistic with your sizing. Like if you have a $5,000 demo account, grow the thing to $10,000 by taking trades that only profit you like $100, maybe $200. And so it takes a little bit of time to actually get to that level where you can double your account. Only then do you try to dabble with a little bit of cash. And even when you start really small and be very careful. You want this to be a process that takes time so that you have confidence. Otherwise, you're just going to tilt right away and then blame it on the strategy when it's really just your own psychology and not being ready. So you really need to be confident in your strategy, have your psychology intact, really know what you're doing with your trading, understand your edge and trust your edge. It takes time to develop that. So you really want to make sure that you are like super confident there. And sorry, I'm on a soapbox now. So anyway, hopefully that helps somebody in here, and it's something that I hope that somebody needed to hear today. These are just things that I've learned over time. Like I can tell you that I lacked accountability early on in the trading. I would just blame my strategy or whatever. And in reality, it's because I would start trading too early before demo trading. Like I wish that I would have had some advice from somebody that would have said, "Hey Nick, don't even trade on a cash account right now. Trade on this demo account with this strategy, stick to it, do it for like 2 or 3 months till you're showing consistent profit, then go live with cash and just stick with the strategy and do it slow." Man, I would have been so much further ahead if somebody had told me that instead of having so many setbacks. So I just need everybody to like hear this because it's super important. So the question is, what type of entries would I recommend a beginner to look for, like second entries, and what type of entries should they avoid, like failed entries? Okay, so this is a good one. There are setups that are more beginner friendly and ones that are definitely more advanced. So, for example, a trade setup like this one where I marked it with a green arrow, even though it's a second entry, it's not the type of second entry a beginner should take because you're picking a top there without having any real confirmation that this thing is going to reverse. But when you get a lower high like this right near a second entry that confirms it, those are beginner friendly. Pretty much you got to take those. Similarly, when you have an uptrend and you get a second entry long like this, that's a beginner friendly trade. So that's a really good one. When it comes to traps and failures, you should only take those if you're already a profitable trader and the strategy works for you. Triple tests are really good trades for beginners to take as well. And then also taking higher lows and lower highs after failed breakouts. Now this one was a failed breakout and a trap. So even though it's a safe trade, it's more advanced. So this is one of those ones where I'd say is not as beginner friendly, but it's definitely a really good trade. So in the beginning, I always tell people, look for second entries inside of trends, look for triple tests, look for higher lows and lower highs after failed breakouts of ranges. I mean, that's pretty much all you need. So I got a question here. How many contracts am I usually trading with? So this question also came up yesterday. This varies based on what's going on in the market. And I mentioned this yesterday. I don't trade more than 30 because I find that whenever I try to go more than 30, I just start to get really stressed out. So it really varies, but a lot of times I'm going to be trading somewhere in the 10 to 20 range. So it really varies, but let me actually look here. Let me look at I'll tell you exactly. Let me see. I traded 20. Okay, so today the last trade I took was 20 contracts. And I have the window open so that if we do take a trade on stream today, it'll be with 10 contracts. And it really varies. Like, this is not something to get hung up on. The reason that I am careful about how many contracts I trade is that everybody's threshold is different. I find that, like, if I try to increase too much, because people have asked me this before, and I said this, I think, on one of the streams recently. People say to me, like, why don't you just trade with 100 contracts? I'm like, well, I can't do it. If I try to do that, I just get too stressed out, and I can't control, my psychology just can't handle it. And that's the thing. Like, anybody that doesn't really know trading or is newer to this will say that kind of stuff to you. Well, if you have a strategy that works, why don't you just like multiply it by 10 and then you'll be rich? And I'm like, dude, it doesn't work like that because you can only trade what you can handle. You need to be taking trades that don't stress you out. Like, you should be trading with a size that doesn't freak you out when you enter your positions. Because if it freaks you out, then your size is too large. And you're probably going to break your rules. You're probably going to tilt if you lose the trade. And it's just not going to be sustainable for you. So everyone's threshold is different. But I will say this. My strategy is the scalp and run strategy. And you want to be able to trade with 5 contracts ideally. And the reason that you want 5 is that you can then take 4 of them off. So you can take off 80% of your position at your scalp target and then leave 20%, which is your single remaining contract, as a runner. So if you're trading the MES, you can do that with 5 contracts and it's a pretty small position size. When you get to the ES, getting to 5 contracts with the ES is a lot larger. So a lot of times what people will do when they're newer is they'll trade the MES. And what you can do is just keep increasing the size that you trade on the MES until you get to the point where, once you get to the point where you're trading with 50 MES contracts, that's basically the equivalent of 5 ES contracts. And then it's better for your commissions to be trading the ES anyway. So there's different ways that you can kind of get to that point. And there's different ways to play this, like some people don't like doing runners and they like scalping the whole thing. Or they like going for a slightly larger scalp target and not doing runners. Like there's different ways to do it. But I think that the ideal is when you can take off 80% on your scalp and leave 20% as a runner. So if you're trading with 10 contracts, that means you're scalping 8 and leaving 2 as a runner. Trading with 20, it means that you're scalping 16 and leaving 4 as a runner. So hopefully that all makes sense. How did and why did I get into trading contracts? So I think what you mean is, why did I get into trading futures? Well, I got into trading futures because earlier on, the way I started trading was I traded different assets. I traded cryptocurrency and stocks. And it's because I got into trading in 2017 and it was during like one of those Bitcoin bull runs. And it got me like really excited about trading and I was learning this new thing. And then over time, I was like watching videos, trying to learn as much as I could. And I came across some videos eventually somewhere in my career from Mac, who was trading price action. And he was trading futures contracts, the ES futures, and I didn't even know what it was. So I started doing research on like, what even is this? And I started watching the chart and I started watching his videos and I loved price action trading. And I loved the simplicity of the tick chart. And I started to do research on it and I realized that most of the futures platforms have tick charts available. And so then I just started to look into that. And also I was trading crypto futures at the time. So that kind of got me excited about it too. And so that's really how it started. And then I realized like the implied leverage in it, the way it moves, the actual professional platforms that you have to trade it, it's just superior to every type of trading. You don't have to deal with all of the stupid things that are in options trading with theta and all the Greeks. You don't have any of that. You have all the leverages built in. You don't have to control your leverage and go, okay, I'm going to be 100x here or 30x here. You don't have to control any of it. It's just all built into it by default. So all you have to do is focus on what's happening on the chart, and you can execute your trades directly on the chart without even having to look at an order book or anything. It's just beautiful. So that's how I got into it, and that's why I love it so much.